Good morning, fellow investors. Today I'll be presenting to you about my analysis on Keppel Corp Limited. Let's take a look at the fundamental analysis first in terms of global economy. Firstly, we'll be talking about the offshore and marine industry. There has been a sharp decrease in oil prices recently due to the oversupply by OPEC and slowing down in demand. There's been upcoming substitute for oil and which includes renewable resources such as hydroelectric power, solar power, and wind power. Keppel Corp has been identified as the top repairing and ship upgrading company, but however, building of new ships will not be viable in the long term wise. In terms of infrastructure, Singapore has high quality infrastructure, which means that its infrastructure needs will be lower than other countries in the region. Hence, its share of regional and global infrastructure spending is likely to fall. Rail projects are key drivers of investment growth in Singapore, with a doubling of the metro system by 2030, contributing to an estimated of 16 billion to be spent over the coming decades. So moving on, we'll be talking to you about the property industry. The property market continues to improve globally as demand is recovering in most regions and construction is only a risk in a handful of markets. The current economic capital market and property conditions suggest global investors to overweight towards Asia Pacific and the United States and to underweight towards Europe. Now moving on to the domestic market. In Singapore, the GDP has been increasing steadily since the past 5 years, reaching its peak this year at 297.94. The constant growth in GDP suggested that the economy is stable with slow inflation rate. Looking into Singapore unemployment rate, defining labour force as any resident of Singapore who is able to work. Unemployment rate is actually considered quite low. Singapore is using its human resources to its maximum potential and thus easier for people to find jobs, which is a sign of showing that Singapore economy is doing great. In terms of Singapore inflation rate, it is actually considered low as well, increasing only 0.1% as compared to last year, which is negligible for most consumers. This means that consumer has higher purchasing power and low inflation rate benefits the economy positively as it encourages more purchases and spending from the consumers. For Singapore interest rate, the current interest rate is quoted by MAS at 0.12%. It's relatively low, but however, it's quite a bit of increase as compared to previous quote of 0.07%, which has been an increase of 0.05%. Since the current interest rate is relatively low, it encourages investors to borrow money for business, which boosts the economy even further. In terms of Singapore government budget, the government deficit refers to the amount of government spending more than the revenue it receives. Since 2010, as a percentage of GDP, the government budget deficit has been kept low with the current budget of only 1.1%. The lower the budget, the better it is, as it meant that the government is spending the money wisely and prudently. It also indirectly means that the country is enjoying economic prosperity. Overall, the economical data has already showed that Singapore economy is doing well. When stock prices increase, it indicates that economy is doing well as well. Thus, we can indirectly conclude that stock prices are expected to rise. Now let's take a look at the industrial analysis. In terms of offshore and marine, Keppel Corp focuses on offshore rig design, construction and repair, ship repair, conversion, and specialized shipbuildings. In terms of Michael Porter 5 forces of analysis, for threat of new entrant, the capital requirement for this industry is actually high, thus the barrier will be high, threat of new entrants will be low. Bargaining power of buyers, there have been drop in oil prices recently and there are many buyers as well. The bargaining power will thus be low. The threat of new substitutes. Renewable resources are the main substitutes for oil, but however, they are not commonly used yet, thus the threat of substitute is low. Bargaining power of suppliers. Keppel Corp requires high quality material, niche product. Bargaining power of supplier will be considered high. In terms of infrastructure, Keppel Corp focuses on power and gas, environmentally engineering, logistics and data centers businesses. In terms of property, portfolio of residential development and investment grade commercial properties, Singapore and China are its core market, while Vietnam and Indonesia are its growth market. Keppel Corp aims for property development for sale and property fund management. The investment that it currently have includes K1 Ventures, which focuses on transportation leasing, education, oil and gas exploration, and automotive. It also includes Chris Energy, which does exploration, development, and production of oil and gas in Southeast Asia region. The third investment that you have on is M1 Limited, which is an integrated communication service provider in Singapore. In terms of industry life cycle, for offshore and marine, it's actually reached its maturity stage and are currently the global leader in offshore rig design. In terms of infrastructure, property and investment, it's actually at the cost and shakeout phase. Let's take a look at the equity valuation. In terms of book value, the price to book ratio is 1.519. The stock is actually overvalued and the company is doing fundamentally very well. In terms of the PE ratio, it stands at 8.685% times, considered low compared to the industry average of 18.1 times, suggests that investors are expecting lower earnings growth in the future. For financial statement analysis, the ROA is 6.3%, which indicates how efficient management is at using its assets to generate earnings. 6.3% of the money spent on asset is actually generated into revenue, which is considered high as compared to its peers, Larsen and Toubro Limited at 3.1%. The ROC is actually 12.08%, which is considered high as compared to its peer at 6.2%. While the ROE is 19.3%, which is higher than its peer at 13.7%. In terms of financial leverage, it leverages around 50% as you can see from the graph, and is lower than compared to its peer at 139%. This is considered an extremely healthy range of leverage for Keppel Corp. For regional analysis, you can take a look at the net profit at 1.159 million, while the EPS is 63.9 cents. For technical analysis wise, we'll take a look at the candlestick graph first. There has been a decrease in stock prices this year due to a drop in oil prices. However, I believe that it's only temporarily as expected to rise in oil prices in the forecasted of next year. As you can see from the graph, there has been a increase. It has been starting to be increased from $6 to $8.72. In terms of MACD and RSI, the RSI suggests that now is not probably the best time to buy it as it's usually standing slightly above 50%. However, for the MACD, it suggests that they will continue to rise as there will be a bullish crossover. So my recommendation is that I suggest to wait a while for the prices to drop before buying in on long position, and the graph supports that the prices will increase and there's a great potential for capital gain as oil prices increases. So I take it for your time.